What is going on, guys? I hope you guys are doing amazing. I have an amazing video here for you guys today. I'm going to show you guys a trading strategy that I use that I feel like is very simple for beginners to use, or those who are a little bit more advanced than beginners. So without further ado, we're going to hop right onto TradingView. And for this strategy, I'm going to show you which indicators that you need first. So we'll just make this a little larger. And just say we are trading the S&P 500 for this. So the first thing that I do is I go to the daily chart and I add these few indicators to my chart. The first one is my auto fib retracements. So it's this one right here, my Fibonacci retracements. My second indicator that we need is our volume weighted average price. The third indicator that we need is this one right here. It's called Wada Atar. Anyways, this one shows us our volume increasing. So we'll use this instead of the regular volume candles. And I believe that is all for the indicators that we're going to use for this. When we go to our daily chart, so we have our daily chart here. The first thing I do is I turn on my Fibonacci's. When we go to settings, make sure it looks like this. I uncheck all of these. I just keep labels and lines. And for the inputs, I keep all of my fib levels. Step one, we record all of our fib levels that might come into play with horizontal lines. Just like that. And then we turn this indicator off. After we do that, we jump onto our 5-minute candle. We make this a little larger and we go to this indicator. So we click that and it comes up like this. So for this one, when we go to settings, keep these settings. So we want to see our uptrend, our downtrend. We turn this off. So the black ones we don't really use. All we want is our green uptrend, our red downtrend, and our white and yellow. So what this is going to do is our green is going to tell us when volume is bullish, red is going to tell us when volume is bearish, white is going to tell us when volume is abnormally increased, and our yellow line is our dead zone. So we don't want to be trading when we are below that line. Now we go to OK and we turn on our VWAP. So for VWAP, we go to settings, and the only ones that I keep is my VWAP indicator and my bands fill. This one. So I keep this, see this right here, so we can see that cloud. Now we go to OK. So how this indicator works is, or this strategy, when I trade on either the 2-minute or 5-minute candles, when we reach these levels, or when we use this blue level, the horizontal, the support and resistance from the fib levels as support and resistance lines. So we keep that in mind, that it can act as resistance levels, it can act as support levels. Now, I take trades, or I look for trades when we are at the top or the bottom of these clouds. So for example, here we've seen that SPY ran up and we come to the top of these candles. We can have this one, for example. We come to the top of this candle and then I look down here. Once we reach the top of the VWAP cloud, I look at my volume and I see what is volume doing. So here I can see volume is increasing, and it's green candles that are increasing. So volume is increasing, and then here what do I see? Volume is below average. and then we see that again, volume is below average. So now that volume is below average, I know there is not buyers that are jumping in as much as they just were. So I consider shorting this to the downside. And the reason we keep the VWAP is because that can also be an area of support. So it finds support at VWAP again. So let's look at another example. We come up here again, we break above this level. Now let's look at our candles or our volume. So this is our volume here. We can see green volume, and then what do we start seeing here? At this candle, we see that volume is now below the white line, which is an indicator of abnormal volume, or our average volume is less, or our volume is less than average volume. So we consider buying to the put side. Now, this is very interesting. What happens at the next candle is now it's no longer abnormal volume. Volume is increased, but it's a red candle, which means we can expect downward pressure. So now we're in puts. It's going down, and around right here, if you wanted, maybe you take a stop loss, or you take some profit around here. But we can look at these candles and see it's actually increasing abnormal average volume with red candles. So this is more of a bearish level. Now we're below this level. So now that we're below this level, it indicates to us, okay, now we are oversold and we are considering buying to the long side. Some people might see this area as a place to buy. Oh, we see a green candle. That's not necessarily a reason to buy, because once again, we look at volume. And what does volume tell us? We're still not doing well volume-wise until we come about right here. And that's the only place where I would start considering, okay, maybe I'll jump into some calls around right here. And we keep in mind this level as a stop area. And we can see this furthermore with the rest of these candles. While our volume, or our abnormal volume, increases, we look at the candles. What is it? It's selling pressure, and we look, where are we in on the charts. Alrighty guys, so that is all for this video. If you want, I can show you one more example actually before we go. So we can see when we come to this level right here, we can see, we look down here, we look at the candles, we see, okay, volume is increasing. Always we need increasing volume to push. If we have increasing green candles, that's buying power to push a stock up. If we have increasing volume that is red, that is enough power to move a stock down. So here we see we have that buying pressure, and it's strong enough to pull this up. And it all started here with these three candles. It had the strength to pull this up. Okay, so that is all for this video, guys. If you guys have any questions, please leave them in the comments below. And that is all. Peace.